They called him the Crypto King. And then he vanished. $250 million gone. In a single morning, the money stopped moving. For a time, he seemed untouchable. Perfect suit, perfect smile, a prophet of a new financial gospel. People gave him their savings, their futures, $250 million. Then, silence. The first crack was almost invisible, but the break was absolute. The company stopped posting its daily updates. The polished website went dark. Phones led to a cold, automated message that said nothing. The green numbers turned red. A major fund announced its investment was missing. Then came the message, withdrawals paused. The final curtain fell on a grand performance. The treasury was empty. All that remained was a digital ghost and $250 million that evaporated. This is the story of the Crypto King who vanished. He was young, barely in his 30s, with an easy confidence that belied his years. He spoke like a prodigy, fast, fluent in tech and finance. A modern prophet preaching a new financial gospel. He called his product revolutionary, so often it became his signature. He promised a financial ecosystem where money moved at the speed of code. Absolute safety, unprecedented growth. Journalists hailed him as a visionary. His personal brand fused with the company. Trust became the product. From a handful of believers to a prestigious downtown headquarters. He told stories of tireless nights building a powerful, secure system. The persona he built was his greatest asset. It opened vaults of capital and trust. The rise was built on a deceptively simple pitch. Put your assets here. Charts that always seemed to trend upward. Claims of trading algorithms no one else had. An experienced team, credible bios, and an ambitious roadmap. On paper, the ledger appeared real and balanced. Institutional money lent legitimacy. The secret sauce, advanced bots, arbitrage, yield strategies, opaque mechanics, simple results, numbers going up. He wasn't selling software, he was selling a dream. From seasoned traders to complete novices, everyone bought the narrative, with the Crypto King as their infallible guide. Then the first real alarm bells began to ring, not with a clang, but a hum. Routine transfers failed, again and again. Internal ledgers did not match the public blockchain. Whispers of doubt spread among insiders. Regulators began sending formal inquiries. Under a microscope, the image cracked. Analysts found odd gaps in smart contracts and flows. On-chain reality diverged from the glossy UI. PR called it FUD. He reassured funds were safe, but the cracks were widening. The end felt inevitable. The fall was not gradual. It was sudden, brutal, public. On a Tuesday morning, the exchange froze activity. Customers saw a maintenance screen. The screens went dark. Panic spread across the internet. Institutional lawyers demanded answers. No one picked up. The Crypto King was nowhere to be found. Then a flurry of on-chain activity. The money split and scattered at breathtaking speed. It jumped chains, crossed bridges, dove into mixers and tumblers. The trail grew cold with every hop. The treasury, thousands of hopes, emptied before their eyes. By nightfall, only a shell remained. A terse legal notice. 250 million lost in the labyrinth. Investigators found a money trail, intentionally messy. dozens of hops to muddy the path. Larger blocks landed in unregulated exchanges on island havens. Some funds looped back through newly created companies. Early investors paid back. Inner Circle lived lavishly. Developers paid. A final portion vanished. Cars, jets, real estate. Countless swaps and wrapped tokens blurred the line of sight. Decentralized mixers, nearly untraceable. Each clue dead-ended at anonymous wallets or silent exchanges. This was no impulsive theft. It was a plan exploiting privacy at scale. Leaked chats showed panic before the freeze. Short emails hinted at a liquidity crisis. Court orders revealed wires to shell companies. Celebration headlines turned into irony. Theory 1, a deliberate Ponzi. New money paid old until the exit. He took what was left and fled. Theory 2, a pre-planned heist disguised as a company. A meticulous getaway to non-extradition soil. Theory 3, he was robbed by hackers or insiders with keys. He vanished out of fear or to chase the thieves. Theory 4, incompetence and losses, followed by a desperate cover-up. In the spiral, people grabbed what they could. Each theory fits a piece, none the whole. In the end, the truth may be a messy combination of all of them. Some took what they could as the ship sank. Perhaps he began with good intentions and lost his compass. Perhaps outsiders struck and leaders used chaos as cover. For thousands who lost their savings, the case is not closed. The phantom funds still whisper on-chain. Law and press continue the hunt. His image haunts the public imagination. A single line on a blockchain explorer, the last transfer. Millions sent to a brand new, nameless wallet. Who held the private key that authorized it? Where did that key and its holder go next? In a world of shiny ledgers and bold promises, who do we trust with the crown?